so much for joining me today. My name is Trisha Thomas. I'm a partner here at Fourlane, and today I get to talk to you guys about budget creating and reporting. And of course, we know this is inside of QuickBooks Enterprise. We are going to talk about budgets. I have a lot of clients and they'll say like, well, what do we need a budget for? What is a budget? How do we do it in QuickBooks? And that's what we're going to talk through today. So we're going to talk about what is a budget. And I purposely put in here financial budget because inside of QuickBooks, you have different types of budgets. So there's a project budget and there's a financial budget. Those are two different things. For today, we're going to talk about the financial budget. Okay, so we're going to talk about, well, why do we need a budget? What's the purpose of it? How would I use that information to make decisions in my company? Okay, and then we're going to talk about, well, what is included? When I go to create a budget, what should be in that budget? And the last but not least, we are going to talk about reporting. Okay, so how do we use the data? We've built our budget. We've got everything we need. Now we want to look at the reporting to make those decisions. Okay, so first question was, what is a budget? Okay, so a budget is used to create a prediction on the income and expenses the business will have in the next fiscal year. So when you think about a budget, right now we're in 2025. So when we create a budget, we would be thinking about future. What are we going to do in 2026? Most of my clients start talking about this with their managers, their directors. Usually around October is when we start the budgeting process and kind of get that rough draft. What does it look like? What is our focus going to be for this next year? Doesn't mean we can't change, but when we build a budget, most of the time it is an annual budget. How are we going to do month by month as a company for our revenue and our expenses? Okay, now this question of why we need a budget, there's lots of reasons, but I've kind of put it into 5 kind of main buckets to kind of really think about the why behind it and why we need to do that. So first, of course, for a company, it's our financial planning and control. So we want to be able to anticipate the income we expect and the cost over a specific period. And this allows us to be proactive in our planning. So to think of the shortfalls, being able to make those decisions, change if we're not hitting those budget. So forecasting our revenue and our budget. This also allows us to keep our focus on our cash flow. So we want to make sure that we have a good cash flow management. So this ensures that a company has enough cash to meet the obligations, such as payroll, such as your vendor payments, and of course, if we've got any loans. So this is very important to make sure that we can meet those obligations. And next is being able to monitor our expenses. So we want to make sure that we have in place what our spending limits are going to be. So that way we can identify when we are overspending in any of those, I always call them buckets, our expense accounts. Okay. Next is going to be our strategic alignment. So this allows us, that budget is going to ensure that we have our resources we need to hit those goals. So making sure we have capital, we have the labor, we have the materials, and they're directed where they need to be in our priority areas to support our business goals. Performance measurement. So we want to be able to compare our actual results of a company, how we're doing against our budgeted figures. Remember, this is our budget is our estimation, what we're expecting and what we want to focus on a company. So being able to have this reporting allows us to manage it, to look at it and make sure that we are hitting as we said we would as a department and we're on track. Next area is our risk management. So think of your budget and you want to make sure that you create buffers or provisions for unexpected cost. So we want to make sure that as a company, we can withstand financial shocks. Okay, so always making sure we have a backup plan. This also allows us to run some scenario analysis. So it allows us to model different financial scenarios, best case scenario, worst case scenarios, and this is going to help us with making better decisions. Number 4, communication and accountability. So having internal transparency. So a budget is going to allow the communication of expectations to departments, making sure our teams are aligned, and making sure that we are all focused on our company objectives. That takes us to that accountability. So that budget's going to allow us to set our team benchmarks, and our managers will be held accountable to reinforce what that fiscal budget is. Okay. Number 5, to support our external stakeholders. So if we've got investors, we want them to have confidence that we know what we're doing as a business. So a budget, a well-structured budget, is going to signal to our investors and our lenders that our company is managed responsibly. On the other side, if we need to apply for a grant or a loan, a lot of times they're going to require a budget as part of the proposal. They want to see as a business, what are you projecting that you're going to do as a budget, as a business, excuse me. Okay, so they're kind of my main things around the why I would tell a client you need a budget. So next section is what is included in a budget. So inside of QuickBooks, we're going to hop in there and look at a sample file, but you do have the option of budgeting for your balance sheet or your profit and loss. 99% of my clients, their budget is around their profit and loss. They want to see and create a budget around their revenue and expense categories. They want it broken down in each bucket, whether that's divisions, revenue streams, department. This way that they can see the insight on how they're performing. This also allows them to see if we're on track or off track. So this is going to allow that tracking so that we can monitor if we're not hitting our budget, what can we do to change it? What can we do to get back on that path if we are not hitting those variances? And of course, this is going to fall into our net profit. So showing us, based on these budget numbers for our revenue and our expenses, how profitable that business is going to be after everything is said and done. Okay, so that is what is included in a budget. Now what I want to do is I want to walk you through step by step creating a budget inside of QuickBooks Enterprise. Okay, so I've got my sample file open and we're just going to walk through step by step. So when we create a budget, some kind of things you want to have good housekeeping is, of course, always start with, we want to have a good, clean chart of accounts. We want to make sure, again, what I'm recommending is our budget is around our income, our direct cost, and our indirect cost. So we want to make sure that we have our most important focus as a company, that they are set up as GL accounts. This is when we talk about restructuring chart of accounts. This is kind of those why behind there. If you put too much detail, if we have our chart of accounts broken down into so much detail that it is affecting our budget numbers and what people are having to put time and energy, this is a way to kind of step back and say, we need to simplify. We need to think of the big picture of what is important as a company and our budget, and that should be what's in our chart of accounts. Okay. Also classes. So your class list allows you to take your profit and loss and break it down into different segments. So being able to take a deeper dive into how we're doing and performing as a company. And it can be by divisions, by revenue streams, by departments. And basically what I tell clients is, what is important to you as a business owner to track? What do you want to see? Sometimes it's, I want to see how we did a new business versus returning business. You can see that this is a construction company, and they're wanting to track job costing across the board. Now, I will tell you, again, this is a sample file, so I didn't build it. I would push back on this client to say, should this be classes? Can we use our GL accounts? But that's another topic. So we're going to leave it as is so that we can kind of see how we break down our budget by classes. So that's kind of first. We want to make sure we have a good set of GL accounts and classes if needed. And now we're going to go to creating our budget. So we're going to come up here to company, and we're going to go down to planning and budgeting. So for this week, I'm going to talk about budgets. And next week, I hope you guys join. We're going to talk about forecasting. We're going to kind of take it to the next level to, talk about, hey, we're not hitting our budget. What are some things we can do? So today, we're going to talk about setting up our budget. Now, I did go ahead and create this to show you some time, save some time, but I want to show you what you would go through on creating a new budget. Now, there are tools to allow you to import a budget with Excel. I'm not going to go through that today. We're going to go through, if we're inside of QuickBooks, what would it look like? So the assumption is that we did create this in Excel. We worked with our departments and determined in each of these areas what is our budget number. And you see it's per month. And that's very important. We can have an annual total, but we need to break it down in month. And this is very important for seasonal businesses. So you can see that not every month is going to be the same. So this is why it's broken out by month, because sometimes we have a busy season and a slow season. So it allows you to really take that deep dive into those buckets per month. Okay, so the first time you came in here and did this, it's going to look like this. It's going to say, choose your year. Now, again, this is a sample file. So, of course, it's got some, unique dates. But if we're in 2025 and we're creating this for 2026, that is the year that we are going to pick. You can see that you can choose the type of budget. And as I told you, I'm going to focus on a profit and loss. That's usually what's going to drive our businesses. And that's what's important when we think about that cash flow management, is bringing money in, keeping our expenses down. You can see here that you can choose other criteria. Now, I will tell you, I don't know of customers that will do a customer job budget inside of QuickBooks Desktop. That is what we would call a project job, and we would do that using different features. So it is here, but I will tell you that it doesn't pull in like you would expect it. So I wouldn't go down that route. If you need to create project budget, customer budgets, please reach out. I'd love to work with you on designing that. And then you can see if we have classes, you can set that up. Okay, so I'm going to go ahead and I'll hit just so that you can see it. And here's your two options. Are we creating from scratch, or are we going to use last year's numbers? And so if you choose last year, which is what I did on the one that we're going to show you, it's using how we performed per month, the actual, oh my goodness, the actual how we did per month for our revenue and our expenses. Sorry about that. Okay, so let's come back in here and let's look at a couple of features that I want to show you guys when you create it. So basically what I have selected is bring in last year's numbers. So if you've been in QuickBooks previously, this is a lot easier than starting from scratch. If you're a new business, the first budget might be a little painful because you are going to manually enter these. Okay, so you can see here on my GL accounts, these are all of those active chart of accounts. So that's why I say it's very important that we have a good, simple, streamlined chart of accounts. For example, if you see here, we have job-related cost and we have job labor cost. I would push back on my clients to say, do we need this level of detail? We might, and that's okay. But this is where we want to always make sure before we build a budget, we have good sets of GL accounts, okay? And then your next column is your annual total. So this is basically a calculation that QuickBooks is doing based on what you've entered month per month, okay? So you don't enter that, it calculates it for you. Down at the bottom here, when you select a cell, you open up some other options. So copy across, what this is if we are going to have the same budgeted number every single month, we can enter it one time and let it copy across. So for example, if I'm going to say that we're going to have a bond expense and it's going to be $500 every month, I can just enter the first month. And then I can choose the copy across, and you can see it entered it for me. So I didn't have to manually tab over and enter each one. The other thing is the adjust rows amount. I love this feature. So what this does is it says, a lot of times you say, okay, this year, here was our performance, and I want to push the mark for next year. I want to increase our revenue by 10%. I want to increase our revenue by 20%. So instead of manually doing that, we can actually say increase every month by 20%, okay? And it's going to do it for me, okay? The same as, in case you guys don't know, you have basic calculations inside of QuickBooks. So for example, let's just say on my bond expense, I said, oh, you know what? It's not $500. It's actually, $600. Or you said, oh, I need to think about, we get charged an additional $20 fee. I can come in here in the field and I've got my number. I can hit my plus button and I can put $20 and it's going to calculate it for me. All I did is hit tab. And again, I can say copy across. So you've got some basic calculations built in here for you. Once you have your budget exactly how you need it, you can hit OK if you need to come back to it. So saving it is what kind of makes it active. So you want to go ahead and save it. And now we have the first step, which is creating our budget. Okay, so now let's kind of talk about the reviewing and managing our budget. Okay, so we've created our budget. And now we're functioning in 2026. We are invoicing our customers. We are having our overhead expenses, our direct material, our labor expenses. So throughout the month, those are our actual numbers against our budget. Okay. So coming over here, so how we review and manage our budget is found under reports. We're going to come down to budget and forecasting. And you can see you've got lots of reports. So let's first just go to the budget overview. Okay, so why you would want to do the budget overview is, in my opinion, once we create it, once we save it, we want to export it out and we want to get buy-in. We want to share this with our department managers and we want to make sure they agree with it. This is their budget that they are saying, this is how my department is going to help push this. And you want that buy-in. You want them to be part of the discussion and you want them to say, this is what I'm committing to. So to me, I think it's a good exercise to, once you have it saved, go ahead and send it to your managers. Let them have that last view, that buy-in to say, yes, we agree. This is what we're going to do as a company in our area. Okay, so this is our overview. Again, it looked just like we created. We've got our GL accounts and we've got our month by month, and it comes all the way over here to what our totals are. Okay, so now as we're going out the months, now we want to see how we're doing. So we want to see per budget, per actuals, what's the difference? What's that variance? So we're going to come in here, same area, reports, budget and forecasting, and this time we're going to look at budget versus actual. Okay, let that come up. And you can see that it is right here as the default. It did the whole year. I can choose to just the month that I want to look at. I want you guys to see the whole picture of what it looks like, so that's why I left it for the whole year. So you can see that it is showing you the month, the GL accounts, and then your first column is, this is what we budgeted. So in construction income, we budgeted for the month of January $34,320. Now we have, next is, did we hit it? So are we there? And in this case, we didn't do any. And I'll tell you guys the reason why is because it's still on my transactions are in 2025, not in 2029. So you can see that we're not doing very good here. We are not performing as we should. Now, in your case, you would see in your January 29 that you had actual numbers here. So, for example, in our repair and maintenance, we do have an actual 1407. We did not budget for that number, so we are actually at 100%. We are over budget 1407. This is also a good way to kind of look at why did we not budget? Did we maybe class this in the wrong area? Because you can see we've got insurance auto of 1250. So this is kind of a good kind of that month end close review to make sure things are being posted where they should, or maybe we budgeted in the wrong area. You know, maybe we need to move that. We didn't think about repairs and maintenance. Okay. So this is going to give you that to show you, again, performance wise, actual how we did versus our budget. And then these are going to show you percentage of budget of where you're at. Okay. Another report, it's the same thing, but it just shows you a different format. And this is what we call the profit and loss budget performance. Okay. So what this did is this took it just to say that year-to-date budget and annual budget. So it kind of looks the same, but it kind of took out all the other noise. So it's showing you, again, how we're performing on that month versus the budgeted month. And then it's also giving you that year-to-date budget for that income account, that expense account, and then against the annual budget. So you can see how everything is going. Okay. Last one I'm going to show you is the fun little graphs that they have. And this is the budget versus actual graph. So this is very colorful. And what it's showing you here is blue is you're doing really great per month, and red is you're not doing so great. Of course, we're not doing great because we don't have a lot of data in there. And then coming down here is your yellow is your actual versus your budget. And again, it's showing you your different revenue areas on how we're doing. Okay. So those are kind of the, again, the purpose of us reviewing this is we want to compare our budgeted amounts against our actual results. And what we're focusing on is the variance. And that's what I'm going to kind of talk to you guys about. And next week's webinar is what do we do? What do we do if we have a variance and we're not hitting our budget? And that's going to take us into our forecasting and kind of talking that. The use and purpose of a budget is to identify areas that we're overspending or underperforming. This also allows us to investigate those variants in those specific GL accounts. So coming back over here to this, we can really kind of see what's going on and have that bird's eye view at each of our GL accounts and what we're doing as a team, as a department. And so this allows our operations to really make changes and adjust as we're going. Okay, so we have about 1 minute left. I'm going to look over and see if we have any questions before I let you guys get back to your day. Let me hop on over there. And we do not have any questions today. So I hope you guys enjoyed today's reviewing the budget. I hope you guys are, if you don't have a budget, I hope you walk away from this and think about, hey, should we have a budget? And of course, I'm going to tell you yes. And then start thinking about what would go into that budget. What is important to us as a company? What do we want to keep our eyes on? We have a lot of clients right now that are struggling. They're struggling with the changes that is going on. And this budget is going to help you. This is going to help you see what's working and what's not working. Where are we underperforming and where are we overspending? Where can we make changes? Okay, well, thank you guys all so much for today. I hope you have a good rest of your week. Thank you.